And we're on. Hi, everyone. Welcome. Make sure to fill out the poll. We're interested in what type of business you are, or if you aren't a business, you're an employee, fill out that section as well. And it looks like, yeah, okay. We're getting comments that, yes, some of you can hear us now. Yeah, we were waiting to turn the broadcast on the dot, 1 p.m. So here we go. And also drop in the comments where you're based. So I'm on the Gold Coast. Michael is in Sydney. I think we've got representation from quite a few different states. Yeah, if you're on the Gold Coast. And how's everyone going with the social distancing and remote work? I was saying to Michael before we started, my daughter is sleeping at the moment. I've got a little 1-year-old, and hoping for no interruptions during the webinar. It's timed during nap time, but it's a different world these days.
So if your camera just goes blank and you go on mute, should we just assume that you're looking after the bub?
Yeah, Sam saying feeling lonely, no interactions. Yeah, I guess it's online interactions these days. Social Zoom coffee dates. Yeah, so we've got a good mix of people here. We've got representation in Darwin, Brisbane, Sunshine Coast, Melbourne and Sydney.
Awesome.
Hi, Amanda. If you haven't seen all of the chat, I like John's comment, waves from a safe distance. Or just give it a couple more minutes for everyone to join in to complete the poll. So if you haven't done that yet, make sure to complete what type of business you are. And that will help us to tailor the content as we go. Most of the presentation today is around how government stimulus applies to businesses, but we do have a section on households as well, because while many of us will be business owners, there are also things that can impact us as individuals, or maybe impact our family members, our parents, other relatives.
Where can they access that poll, Meryl, if they can't find it?
If you scroll, so you'll be able to see the slides and our faces, and if you scroll down below that, you'll be able to see the poll.
Awesome. What are we? We're currently at the moment 55%, 58% company, 30% sole trader.
I've seen a question around audio. So I think most people are able to hear us. So a couple of things you can check with your audio. Just make sure that the headset that you're using is the headset that's selected here. And you should be able to check that in the settings. And then also just check that the volume is turned up. I've made that mistake before, had volume at 0. Yeah, so we've got plenty of different types of businesses here, from coaching, consulting, plumber, SEO, accountants. Yeah, it's great. All right. Well, I think let's get into it, Michael. I think others can join in as we go. The chat is for general commentary, but if you've got a question, a specific question or a technical question, something about the content, similar to where you were looking in the poll section, just to the left of that, there's a section for questions. And if you've got a technical question, it's best to put it in that questions area, because then we can reply back and keep the conversations in the thread. So the chat is for general chat, asking how we are, industries we're in, things like that. But the questions area is for the technical questions. So before I hand over to Michael, I wanted to thank all of you for joining us here. I know that it's a little bit of an uncertain time at the moment. We have the global pandemic, and that's creating some economic uncertainty. And there are things that governments and other companies are putting in place to help with this. But from what I'm seeing and from talking with our clients, it is all a little bit confusing. And we've put on this webinar today to help with that. A lot of these changes are only new. And so we're going to be doing our best to explain in plain English what this means for you and your business and your household. And we want it to be a discussion. So please feel free to ask questions as we're moving through each of the topics. And Mike will be presenting. I'll be jumping in with some commentary, and I'll also be monitoring the chat and the questions to try and direct them to Michael as we work through. So Michael, over to you.
Awesome. Thanks. And thank you everyone for attending. We really appreciate you all spending the time with us. So hopefully we can really give you a bit of value and some things for you to be able to put into your business or to your household moving forward. First one is just to echo Meryl's comments about the changing world we live in. Obviously, there's a huge amount of turmoil and change going in our world. So I hope everyone's staying safe, both from a health perspective, but also from an economic perspective. Obviously, a lot of things have changed quickly. And it's very easy to get flustered and fearful in this environment. So I really like this quote because it kind of reflects on focusing on the things you can change and the things in your immediate environment you can do, not only to stay safe, wash your hands, stay inside, but also business wise and economic wise, the little things that you can adjust to get you through this tough period. Because, it does look like we're coming into stormier weather. So to steal a sailing analogy, you put a reef on the sail and prepare to get through it. And hopefully this presentation will give you a few tips to be able to help you get through this period. Just a quick background. I know we have a lot of our clients here on this call, so thank you all for joining us. Appreciate it. And if you don't know who we are, we help small businesses with their bookkeeping, financial reporting, zero education. We have a couple of online courses for that. We do some profit first consulting, which is a cash flow management technique that small businesses find really helpful. And we also do a bit of business coaching. And a shameless plug to start, we won Bookkeeping Partner of the Year last year, which is really awesome. So that's about Bee Ninjas. Actually, I should just say the disclaimer that both Meryl and I are chartered accountants and obviously over 10 years plus in this world, but this is general advice. So speak to your tax accountant for specific tax advice. But I'm sure you've heard that a million times. But we will try and answer your questions and give you as much value as possible. But that's just a quick disclaimer. This is me. This is a photo of me when I used to be able to go outside. It's a simpler time then. Background is I'm a financial coach and profit first consultant here at Bee Ninjas. I'm a chartered accountant, as I mentioned, and I'm passionate about helping small businesses survive and thrive. I get a lot of satisfaction from helping people in my community and in the Bee Ninjas community improve their business and really see the effects of that. That's where I get drive satisfaction from doing this. And I've been part of Bee Ninjas for 3 years and counting. And how long have Bee Ninjas been around for now, Meryl? You're the founder?
Yeah, we're coming up to almost 5 years. So we're just a couple of months off.
Awesome. So I'm there for 3 out of 5. That's not bad. Cool. Let's jump into it because I know people want some value. This is covering the 2 stimulus packages that the federal government announced. So there was a 17.6 billion package released on the 12th of March, and then they doubled down as the economy looked stormier, and they announced another 66 billion stimulus package on the 22nd of March. So this is trying to cover what those 2 announcements entail. I should mention that we're not covering state-specific relief. So I know there's a bunch of payroll tax concessions in the various states. And Meryl, I think Queensland announced like an interest-free loan for a while as well, the Queensland government. Is that right?
That's right. So there's other stimulus packages, loan relief that you may be eligible for as well at a state level. There's also things that local councils are providing. So we're putting together a resources page for that, but we won't be covering that in this webinar because it's very specific to where you're based.
Yeah, absolutely. But hopefully we can get that out to people as well. And I should note, the government has also set aside another 40 billion to be spent from the 1st of July. So before they wrapped up Parliament, they put aside a war chest of 40 billion. So we don't know where that's going yet. So stay tuned, and maybe we'll run another webinar once they announce those measures. So that's potentially in the works down the line. And just a little hook to keep you tuned in. There's an epic free gift to help you at the end of this. And we tried to put some stuff together that will really give you value for sticking around. So stay tuned for that. And Meryl, I think you covered the questions, but do you want to just outline to anyone who's just joined recently?
Yeah, so if you've just jumped on, If you scroll down below the view where you can see Michael and my faces, there's a section where you can add questions. So this is for the technical questions. So anything about the stimulus packages, the advice we're providing around how to improve or consider cash flow at this time. And the chat is for general conversation. So feel free to drop questions in there and I'll be answering them as we go.
Awesome. Let's get into it. So this is our agenda. We're going to cover what the Australian federal government has announced. So those are all the things that ScoMo has been announcing as we go. We're also going to cover what the Australian Tax Office has announced. They've announced a few initiatives to try and help small businesses and individuals. We're also going to cover households and individuals. So wrapped up in that is probably the sole traders as well. And then as a bonus, we're going to give some cash flow tips for these turbulent times. These are things that we try and help our clients with, and we think will help you weather this storm as we go into more uncertain territory. So let's cover the big six, as I'm calling it, to start. And this is the federal government's 6 big announcements that were announced over the 2 different periods, Stimulus 1 and Stimulus 2. The big one that's obviously getting a lot of traction at the moment is the tax-free cash payments to entities that employ staff to help with their wages. So this is the pay-as-you-go withholding cash stimulus. And we'll cover that first because there's a lot of questions around that and we know a lot of people are interested. So that we'll cover that off first so you can ask some questions. The second measure is increasing the instant asset write-off, which has been used before in the GFC 07-08, and then also increasing the depreciation deductions on some bigger asset purchases as well. Rounding out the big six is some cash support for trainees and apprentices. So that's to try and keep businesses employing their trainees and apprentices and not firing them over this period. So they're supporting you with help pay their wage. Number 5 is some insolvency laws. They're being temporarily loosened for 6 months, and we'll chat through a little bit about that. And then rounding out the 6 is the government's helping small businesses access unsecured loans from banks. So we'll also cover that. That's basically helping small business get easier access to loans from the banks. Great, let's cover the first one. This is the tax-free cash payments to entities that employ staff. Who is eligible for this? Any small business or not-for-profit with an annual revenue of less than 50 million. You had to be registered for pay-as-you-go withholding before the 12th of March, 2020. This kicks in from the 28th of April, which is essentially when your March business activity statement is due. And the government has said they'll be making these cash payments or these refunds 14 days after you've submitted your BAS or your IAS. Now, we'll go through an example because I think that really helps people dissect the mechanics of this. But for payment 1, you get 100% of the pay-as-you-go withholding that you paid from the 1st of Jan this year to the 30 June 2020. So the first 6 months of this year, so from January to 30 June, they take the pay-as-you-go withholding balance that you've submitted and you get that back. This is capped to $50,000. There is a second payment where you get exactly the same amount as the first payment, but you receive this during the June to October BAS period. This is also capped to $50,000. So there's 2, we're going to call them 2 stimuluses, Stimulus 1 and Stimulus 2, when we run through these examples. I should note that you still need to be employing people up until the September BAS in order to access these things. So if you're hiring people at the moment, but then fire them 1st of July, that second stimulus payment no longer becomes valid because you're no longer an eligible entity. I should also note that if you're eligible under this, there's a minimum payment that you will receive, which is 2 lots of $10,000, which is 20K total. So stimulus 1, you'll get 10K, and stimulus 2, you'll get the second 10K. This is automatically credited in the activity statement system. So that is, the activity statement is where you submit your GST and where you submit your pay-as-you-go withholding. So that's already a system in place, and the government's leveraging this and crediting it straight back into that system. So there's no extra forms needed on your behalf, and the first payment is going to be made after the March BAS has been submitted. Is that clear, Merrill? Do you think that's enough? Should we dive into an example from this?
Yeah, let's go into, I think the example lays it out really nicely.
Okay, perfect. So we're going to go through two examples. This is example number one. This is for John, who is an owner, and he's on wages. He's got annual salary of $100,000. And we've simplified these numbers, guys. These aren't exact figures, but let's just say he's got an annual pay-as-you-go withholding balance of $24,000. So if we break that down to a quarterly salary, because he's on a quarterly business activity statement cycle, that's 25K per quarter, and his quarterly pay-as-you-go is then $6,000. So in this, there's two different stimuluses that we're going to separate. There's the cash flow boost stimulus 1, and then the cash flow boost stimulus 2. So there's two tranches or stimuluses. You can see for the March quarter, he has $6,000 pay-as-you-go withholding. The minimum payment that the government is going to give you is $10,000. So for this March quarter, if you have anything less than $10,000 for pay-as-you-go withholding, you're going to get their minimum payment, which is $10,000, which is great news for people with a smaller payroll and smaller staff. So that's where the really awesome boost is for people with a smaller payroll level, but are still getting this really awesome cash back. This is where it gets a little bit tricky and a little bit confusing. You can see that in cash flow boost stimulus 1, there's both March and June payments. And in cash flow boost stimulus 2, there's a June and September payment. They're two different stimulus tranches, but there's payments applied to each of them. So there's a double up payment in June, which is, I know it's a little bit confusing, but I guess the most immediate thing you should know is the March one, if you're less than $10,000, you're going to get 10,000, which is the government's minimum commitment. And then in the second tranche, you will get another 10,000. For this example, John has slightly over 10,000 for his period from 1 Jan to 30 June. So if we take the two quarters together, you can see he's got 12,000 pay-as-you-go withholding. This means that he actually gets a little bit more back from the government because the government is going to match it all the way up to that $50,000 cap for the first payment. So you can see his total pay-as-you-go withholding is 12,000. So to top him up for this June stimulus package 1, he gets an additional 2,000, which means his total pay-as-you-go withholding for the first 6 months is matched. But the 10,000 payment and the 2,000, he gets his total pay-as-you-go withholding matched. Now the stimulus 2, which is where it gets a little bit confusing for people, the government has said, whatever you get paid in this payment stimulus 1, we're going to match that for the June and September, and it's paid equally over those two BAS periods. So for that first 6 months, it was 12,000 withholding. So in the June BAS refund, he gets 50% of that second stimulus payment, 6,000, and then in the September one, he gets the other 50% of stimulus of the payment too. So it's, again, he's getting 12 grand over the first stimulus and still 12 grand over the second, but it's just paid equally. And so whatever you have as at end of June, that's your pay-as-you-go withholding balance. The government calculates that and then pays you that back again over the June and September periods. Now, we should just quickly note for people on monthly IAS, this is the same methodology, but it's just calculated month to month. So it's the same concepts applied as above, it's just calculated and paid monthly. And then for the stimulus 2 payments, that's paid out equally in your June, July, August, and September IAS, which is your monthly. It's your monthly BAS, for argument's sake. So let's go to, does that make sense, Meryl? Do you want anything to add there? Okay, awesome.
So I just had to unmute myself. I think the two examples they lay out the situations of how the minimum and the maximum apply, and also the timing of the payments. And I think a lot of the questions that I'm seeing coming up in the questions below, but also questions that I've had asked to me, relate to eligibility. So why don't we spend some time on that? I know there's a couple of extra slides after this where we dive into, well, who does this apply to? What happens if I'm not paying employees at the moment? So yeah, let's spend some time on that.
Okay, so we skip example 2 and go directly to that?
Oh, sorry, I've had my head down in the questions. Let's cover example 2 as well.
Yeah, we'll quickly do this. People are aware of the concepts. This is exactly the same concept. It's just, this is covering a company with multiple staff members. So the salaries are higher, the pay-as-you-go withholding is higher. And this example is just showing someone who's maxed out that $50,000 cap. For a lot of people, this obviously won't be common. You obviously have to be paying a huge payroll to do this. But for argument's sake, in your March quarter, if you're withholding 33,000, you will get back that 33,000. And then say again, June, you keep all your staff through this period. So the whole point of this stimulus is the government's trying to keep you employing people. It doesn't want you firing your staff in this downturn. This is an incentive to keep employing, keep paying them, and as a result, keep paying pay-as-you-go withholding. For the June quarter, let's say again, you haven't fired anyone, and you've got the same amount, 33,000. For stimulus 1, you've already paid that 33,000 out. The government matched your March one. And because there's a cap of 50,000 on the total payment for stimulus 1, the remainder, 17,000, is paid as part of the June one. So that total is 50,000, which is the cap. And then same as the first example, stimulus 2 is paid in installments over your June and September BAS refunds. So same idea. That's just showing you if you max it out. So there's just two different examples. Again, for people on monthly IAS, the second payment is across the June, July, August, September. So those 4 months. And so you would just take your payment 2 and divide it by 4. And that's what you're getting for those 4 monthly IAS periods. Cool. Let's dive into some eligibility requirements, which I think is really important. So the opportunity and why there's a lot of interest about this at the moment, it's mainly people who currently operate a company or trust and may have been taking a trust distribution or a company dividend or owner's drawings to pay themselves as a reward for working in their business. A lot of people will now be considering paying themselves on a wage via payroll in order to access this cashback scheme. So some people will be looking to max out their pay-as-you-go withholding balance from the 1st of January through to the 30th of June, because you get this paid back to you and doubled for that stimulus 2 if you continue to employ through September. And I should note, for people thinking in this situation, you need to consider the additional considerations such as superannuation and also the personal income tax to be paid on this wage. So we've got a few common frequently asked questions on this. So Meryl, do you want me to run through these and then you can raise a few more that you've seen in the chat so far?
Yeah, that sounds good. And I'll just ask a question. Can everyone hear me? Because I'm switching between mute and unmute. So if someone could just type in the comments, great.
Awesome. So the big question is, can a sole trader access this payment? While sole traders and partnerships that employ others can access this, you can't employ yourself in these structures. So unfortunately, you yourself can't capitalize on that opportunity that I'm discussed in that previous slide. Should you switch to a company in order to access this? So the government's official release has said that this is for active eligible employers established prior to the 12th of March 2020, i.e. I interpret that as saying you register for pay-as-you-go withholding and you're paying staff as at this date. Now, Meryl, you might want to jump here and here as well. We've heard some debate around if you had an ABN before the 12th of March, but you weren't paying pay-as-you-go withholding or declaring it, whether you can backdate this in order to access the grant. What's your opinion on that?
So this is a bit of a grey area, and different accountants are providing different advice around this. And I think it's not really clear about what you can and can't do, because the ATO, it hasn't actually gone through and been proven either way. So could you, if you were a sole trader, could you set up a company? Yes, but you'd need to consider, well, that's a permanent thing and there's ongoing costs associated with that. So I consider whether it is worth doing just to access this grant. And then it's unclear if you were to then to set yourself up as an employee prior to the 12th of March, whether whether that will be deemed appropriate, whether you'll be deemed to meet this criteria or not. So on the face of it, yes, if it was happening prior to the 12th of March that you had employees, yes, you would meet this criteria, but we don't know whether because this is all new, it's not clear whether these rules will be tightened up.
Awesome. Thank you for that. Third question here, how do I predict the second pay-as-you-go payment from the government? So in that example, you'll see what we've titled the cash flow boost stimulus 2 is equal to the amount you've already received for stimulus 1, and it's paid in stages. So for the quarterly BAS, 50% is paid in June and the other 50% is paid in September. So that's why it's kind of a race to the clock to 30 June, because that's the final figure, and then the government just uses that figure and rolls it forward for stimulus 2 payment. A few more frequently asked questions on this. How does this affect my GST debt or current payment plan or tax debts that you currently have with the ATO? Our understanding is, because this is operating in the business activity statement system, and in that system you have your GST and your pay-as-you-go withholding and your income tax all rolled into that same statement, this benefit will offset any existing debt with the ATO. And as far as we know at the moment, again, this hasn't rolled out. We haven't seen it in practice, but as it's part of this system and they're paying it out as part of this system, that's our current position on it at the moment. If this deposit takes your account into credit, can you take this cash out? You should be entitled to a cash refund if your account is in credit, and that's in line with if you have a credit after your BAS submission with your GST debits and credits. So that's in line with any other normal process. If your account's in credit, you can request that cash refund. So that's our understanding at the moment. Yes.
So I just wanted to present a couple of different situations just to really clarify this eligibility criteria. So Michael, the first situation is a business that has always had employees, and they've had employees prior to the 12th of March. And they're just increasing the amount that the owners are paid via wages instead of via other forms like dividends. In that situation, would you say they would meet the eligibility criteria?
Sorry, Meryl, just the audio cut out there. Can you just give me the situation one more time?
So this is an existing business where they have had employees prior to the 12th of March, and they're bringing on the owner to be paid through salary and wages as well.
At this stage, it sounds like you should be able to do that. If you're registered, the key point and the key kind of sentence that people are hinging these interpretations on is active eligible employers established prior to 12th of March 2020. So by that, my interpretation of that question is they were an active eligible employer established, and they're just making an adjustment for the owner's pay for that period. And that's quite common in a lot of business, where people will book their owner wage or payment at period end to recognize it correctly. So I would say at the moment, yes, that would be still included.
Yeah. And so where it's more of a grey area is if there's never been employees, and now where it's being changed to backdate to create an employee prior to the 12th of March. That's where there's different opinions out there, and it's still not quite clear whether that is or isn't possible.
Exactly. So I'm sure they'll issue more announcements on this as we move. This is only a week old, so I'm sure the details are still to be kind of outlined.
I'll jump onto mute and get back to answering the chat.
Awesome. So how do you access Stimulus 2 for June to September? Your business will just need to continue to employ. into the June and September quarters in order to receive this second stimulus. So as I said, if you hit 30 June, and then the 1st of July you fire everybody, that second stimulus boost, I believe at this stage won't be on offer, because they're trying to get people to continue to employ staff through this period. So you still need to be submitting pay-as-you-go withholding through this period. It doesn't say how much you need to be paying at the moment. So potentially that pay-as-you-go withholding could really slim down if you need to go small to get through this tough time. So I think it's just, if you're still an active eligible employer, you should be able to receive those payments that they calculated on your January to June pay-as-you-go withholding. Awesome. So that, we'll leave that there. I know that's a big one, but we've been on it for a while. So I just want to run through the other stuff. And I know people who are individuals or households are probably dying to know how this affects them as well. So I don't want to get too lost in the weeds. Let's continue. Increase in the instant asset write-off. So this is expanded to businesses with annual turnover of less than 500 million. This was previously less than 50 million. So assets used or installed between the 12th of March, which is when the announcement happened, and 30 June. So up until the end of this financial year, if you buy an asset from 30,000 to 150,000, you will get an instant write-off of that. And that's processed in your June tax return. I should note, you need to spend this money and pay tax in order to obtain this benefit. So you need to decide whether you need the asset first, as this expense is going to eat into your profit margins. And this plays into some of our cash flow management tips at the end of this presentation. So you can immediately deduct higher value assets now up to 150K, but I would just say, do you need them, and do you have the cash reserves to get through this period and to buy it? This depreciation deductions are accelerated. This is for the larger assets. So assets acquired after mid-March, and this goes through to 30 June 2021. And so this is trying to stimulate business investment in kind of their machines and bigger assets. Allows businesses to accelerate deductions on assets. You can take 50% of the eligible asset cost on installation in the first year, and then normal rates after this. Again, this is processed in your year-end tax return. I will also warn you, you need to spend this money and pay tax to get it. So make sure you actually need it. So if you're in the hand sanitizer business and you need to pump out 6 new machines, this could be a great deduction for you, but depends how your business is doing right now, I guess. Cash support for trainees and apprentices. Similar to the first of the big 6 that we talked through, this is the government's way of trying to keep you employing people. They're going to support trainees and apprentices. So any small business with annual revenue of less than 50 million, and you've got less than 20 full-time employees, for the next 9 months, so from 1st of Jan this year through to 30 September this year, you can register from early April for this, and the deadline to lodge is 31 December 2020, so the end of the year to lodge it. Basically, they're taking 50% of the apprentices or trainees' wage for the next 9 months. So they want you to be employing or keeping on apprentices and trainees. They've capped this to $21,000 per eligible apprentice or trainee, which ends up being $7,000 per quarter. And I should note, you will be getting a PDF of these slides, so you can access these websites and stuff afterwards, and you can apply at this website here. Great. Let's move on to number 5 of the big 6, and then we'll get on to households and individuals. So the insolvency laws, these have changed a little bit. And this first one affects company directors, and it's only for the next 6-month period. So the government knows we're up against a tough period for the next 6 months. Company directors have a duty to prevent insolvent trading by their company, i.e. they're personally liable for insolvent trading. So if a company incurs a debt when it was insolvent and the directors knew the company was insolvent, so you're broke, the company knows it's broke, but it's still doing business, that's where you can be personally liable. You're not protected by those provisions normally for, a PTY LTD. So do you want to jump in, Meryl?
Yeah, I wanted to jump in quickly, and I know some people can't hear me, so I'll keep it brief, but I just wanted to emphasize that in times like this, with a potential upcoming recession, It's really important that if you are a company director, that you're aware of your responsibilities and the potential for personal liability. So we've just dropped a link in here at the bottom of the slide. Everyone will have access to the slides. And if you are a company director, I do recommend that you take some time to read up about what your responsibilities and personal liabilities may be.
Awesome. Thanks for that, Meryl. So yeah, for the next 6 months, directors will be temporarily relieved from their obligations to prevent their companies trading while insolvent if the debts are incurred in the company's ordinary course of business. So this is trying to keep companies that are skirting the edge of being made redundant because of all these forced shutdowns. It's trying to keep them in business and through for the next 6-month period. So they're loosening these laws. I should note that fraud charges are still criminal, so do not amend invoices to make it look like you're rich. This is just for this one particular section of the Corporations Act. And then the second part of this is insolvency laws are being temporarily loosened to lessen the threat of actions that could push a struggling company into insolvency and force it to close. So they're increasing the statutory demand creditors can issue from 2,000 to 20,000 for 6 months. This essentially is when someone is chasing you for money and you may not have it right now, they can issue a statutory demand for their money, and you had a short time period to respond. If not, they could begin the proceedings to send you into liquidation. So this is basically trying to protect you from being forced into liquidation by creditors by increasing the amount from 2,000 to 20,000 for the next 6 months. I should point out this is all temporary laws that are being loosened to try and help people through this period. And once someone has demanded this from you, they've increased the response time that you have to get back to them from 21 days to 6 months. Again, they're building that bridge and trying to get people who are struggling across that gap. And this is just about small business loans. So you probably will be covering the personal banking in a sec, but this is just the small business or the SME guarantee scheme for unsecured loans. Unsecured loans are things that don't have an asset behind them. Normally a loan you take out, you'll use the house as collateral. That's the security of it. So small businesses turning over less than 50 million can borrow up to 250K. This begins in early April until the 30th September 2020. So the government has guaranteed 50% of new unsecured loans to small businesses that banks lend to help with working capital. So banks are more likely to lend you cash when you go in and ask for it because the government is guaranteeing 50% of what the banks are lending to you. So it's giving the bank a bit of security about these loans they're giving out. So reducing the risk for the bank and putting it on the government. I should note that any small businesses with current loans, I've seen that the big four banks at least are offering to defer repayments for eligible small businesses for 6 months. So I'd say get in contact directly with your bank to see what they can do if you have a small business loan with them at the moment. There's a lot of goodwill around this. People are really trying to help businesses survive through this. That finishes our big six from the federal government. We're going to move on to a quick summary of what the ATO is doing, and then we'll get into households and individuals. Meryl, was there any questions from people about those last few, or are we good to keep going here? Okay, awesome. So ATO assistance, they've come to the party as well to try and help people through this. They're offering payment deferrals on your income tax debts due, your pay-as-you-go installments, your fringe benefit payments due, and you can defer all of these by up to 4 months. I was chatting to someone earlier who's already done this. They got on the phone to them and they deferred all payments for the next 4 months to help with their cash flow through this time. For GST credits, say if you commonly get a refund and you want to try and access this cash quicker, you can change from quarterly BAS to monthly IAS to get this cash in your pocket quicker. So you don't have to wait to the end of the quarter to get it. You can do it monthly now, and they'll let you change that to get it back. You can also call them and ask to remove interest and penalties charged, so late payments, stuff like that. They're saying, okay, we'll waive it. We know you're struggling. And you can also ask for other debts to go onto a low interest payment plan. I know they're offering really good interest. I mean, interest rates are almost nothing at the moment. So they're coming to the party and putting you on a low interest payment plan. So how do you do this? Here's a direct helpline. 1-800-806-218. You'll get these slides as well at the end. Don't worry, we'll send all this stuff out. I'd say get on the phone. They're being really helpful at the moment, and ask what you can get. Change your installments to nil, shift your due dates, pause your payment plans, ask them to remove all interest and penalties, and then if you have other outstanding debts, get them on low interest. I know the ATO is really coming to the party here, and all their messaging has been about trying to support business right now. So I think you'll find they'll be really generous in these areas. Okay, I know some people on this are also just normal households or sole traders who don't employ staff. This is what has been announced so far that we think is really helpful. First, you can defer your home loan. All of the big four, and I believe some other lenders have also come out with a similar offer. For those affected by the COVID-19 situation, you can defer. So ANZ, Commonwealth Bank, NAB, and Westpac, all very similar. So ANZ, you can defer your repayments for up to 6 months. Interest is capitalized. Again, with the CBA, interest is capitalized. You can defer it. You register digitally. They've all set up special landing pages for this. So if you speak to your bank, or if you have a direct bank line, if you're a business banker, call them and they can probably do it over the phone for you. NAB, again, you can defer repayments for up to 6 months, but they said they're going to check in with you after 3 months. And Westpac, they've officially announced they'll defer it for 3 months with another 3 available after a review. When I say interest is capitalized, what I mean is this is added to the loan. So after this mortgage holiday and you don't have to pay this for the next 6 months, your loan balance is going to be bigger because those interest payments that were due, they add to the value of your loan. So your loan is going to be growing. They're not just removing all these payments from history, they're adding that to your loan. But it's just trying to help you with cash flow. So it's really generous of them to do, and hopefully some people can take advantage of it. So speak to your home loan provider about this. Early access to your superannuation. So you can now access up to $20,000 of your super. This is again to help with cash flow. I should point out your superannuation is your money, so you're just getting early access to it. This isn't a benefit from the government. They're just giving you access when normally you have to wait till later in life. So employees or sole traders who have had working hours or turnover reduced by 20% or more, and the unemployed and job seekers can access this. You can apply via MyGov before 30 June 2020 for the first 10,000, and then you can access the second 10,000 between the 1st of July to 30th September. So you can see with all these time periods we're talking about, they're for the next 6 months, they're for the next 9 months. They're really trying to get people through this tough period coming up. Individuals in financial distress can access 10K from their super, and the second, from 1st of July. There's no tax on these amounts, and it won't affect other welfare payments that you're on. So that's another way to try and access some cash at this time. You've probably seen the lines around the block with the JobSeeker New Start payments. A lot of people are really doing it tough at the moment, and we feel for them that people have had their businesses closed overnight. So a lot of them are going to be applying for this JobSeekers payment. They've doubled it. So JobSeekers will now get a $550 boost to their fortnightly welfare payments. So they've opened up who this is possible for. So if on or after the 1st of Jan 2020, you were made redundant, your working hours were reduced by 20% or more, or if you're a sole trader in business suspended or turnover reduced by 20% or more, you now are eligible to get this job seeker payment. Previously, there was like an income test, but also an assets test. They've removed that assets test. So it's just if your income has dropped by 20% or your working hours dropped, you now become eligible. I should note there's a time period for this from 1st of Jan to 30 June 2020. One big thing that I heard yesterday is you don't need to go into Centrelink. All those lines around the block that you saw in the news, that was for people trying to get a customer reference number that you could only get in person. Centrelink have now changed this. You can do this via your MyGov login. So you don't need to go in there anymore. You can get a customer reference number if you log into MyGov, there'll be a little section where you can click on there and you can begin the process. They call you back and you can begin that process. So that's really handy for people who are trying to socially distance and don't want to wait in lines. Maximum base rate is now 1,115.70. So it's, you know, it's a fortnightly payment. It's not great, but it's something to help people through. So hopefully people who can access that will. And as I mentioned, it's just dependent on the income test above. The asset test has been waived. I'll quickly skim over the pensioners and veterans payments because some of you might have, you know, parents or friends and family who could access this. There's two separate $750 cash payments to pensioners, veterans, New Start, concession card holders registered from the 12th of March onwards. The first $750 is going to be on the 31st of March. The second payment is going to be on the 13th of July, 2020. So that's two separate $750 cash payments. These are processed automatically. You don't need to apply. Again, there's no tax on these amounts. That won't affect other welfare payments. This is just the government trying to pump cash into the economy, into the system to keep us going. And retiree support. If you're on this call, maybe you are retired. Congratulations, well done. But if you're not, you might have friends and family who are. They've reduced the pension drawdown rate. So people drawing a pension from their super for this year and then the next financial year, the government is temporarily reducing the minimum drawdown requirements for account-based pensions and similar products by 50%. So it will benefit retirees holding these products by reducing the need to sell investment assets to fund these minimum drawdown requirements. So that's really handy. Okay, we're up to the cash flow tips. I just want to make sure that we've got all the questions covered for the first section. Meryl, I'm not sure if you're on mute or not. Do you want to give me a thumbs up or thumbs down if we can keep heading along here? All right, great. So these are some cash flow tips that Meryl and I came up with. We've seen them work in our clients' businesses, and we think they make a lot of good sense right now. Now, you'll notice, I just want to preface these tips by saying you'll notice a lot of these tips are in contrast to what the government is trying to get you to do in the stimulus package, what I just mentioned above, to invest in assets, to build things. Unfortunately, when a recession is on the horizon, a lot of people go small to survive it. And obviously the stimulus is trying to get people to open up and still spend cash in the economy. I know there's a bit of duality there because of the two sides. This is basically aimed to help our clients through this. So this is from our perspective, trying to help you get through here. First one is cash is king. Preserve it at all costs and act quickly. So stop bleeding cash. This might involve tough decisions around staffing or suppliers. So you need to look right now about things you can trim down of, or things that are really sucking cash out of your business right now. Have a look at them. Do you still need them? Really analyze that.
I'll add a quick comment there. So the idea behind this advice is that with a potential recession coming, you want to be in a position and have your cash balance in a position to ride it out to the other side. Now, you wouldn't necessarily want to cut costs around things that impact the quality of your product or service, but it's looking at, is there somewhere where you can trim costs and retain cash so that you're in a position to ride things out? But also you want to have a business as well. And so that means that if you're going to cut a cost that impacts the quality of what you're doing or means that your customer retention is going to drop, then consider that carefully as well.
Great points. Awesome. Thank you for that, Meryl. Second point here, revenue is vanity, profit is sanity, cash is reality. This is reiterating our first point. Before you launch your new pivot into your online services or update your business plan or work on your new brand strategy, preserve your cash, reduce your cash burn rate. And echoing Meryl's sentiments, this shouldn't be reducing your customer experience. This is looking at things you can trim down or work smart to find productivity gains in that. Another big one is chasing up your outstanding accounts receivable balance. You need cash in the bank. Set up payment plans with clients. You can do progress billing to get paid a little bit more often. You can offer a discount for early payment to clients. You can get paid upfront and don't start work until you get that money. You can also implement a late payment penalty. This all needs to be given terms up front. You can't implement late payment penalties now for things that are still outstanding. Automate your invoicing to make sure it goes out on time, and look at things like maybe start invoicing every week instead of every month to get more cash in your business quicker. Another obvious but really important one is to maybe try and delay your accounts payable. Negotiate with the supplier payment terms. Can they extend your invoice out to 60 days due? Try and work with them. I know a lot of businesses that survive have good communication both with their clients and suppliers, and everyone tries to work together to help each other out. So instead of trying to, screw over one person and help the other, I think communication in this period is really, really important. And so everyone understands the situation they're all in, because we're all in this together.
And I think that leads nicely into one of the points that's on the next slide, but a lot of it is about communication. And so we're hearing a lot of instances of things like rent being able to be renegotiated or delayed, the payments for that delayed. And so I think it's just about having good relationships with your suppliers as well as your customers, and having open conversations about where you're at and what we can all do to help each other.
Definitely. So this is probably the point that is in contrast to the government's incentives to make you spend money on assets. Delay or eliminate unnecessary capital spending. If you don't need it right now, potentially look to push it out. Or maybe people are selling stuff at a real big discount and you've got the cash reserves to get you through here. Maybe you could jump on the discount. But at least think about it when you're spending that money. Another common one you'll see around town is sales. Everyone's trying to minimize their inventory replenishment, look at the impact of reducing their stock levels. So everyone's running down their stock levels, building up cash supplies. And that's why I've seen a lot of sales at the moment. Did you want to add anything, Meryl?
No, I know we're slightly over time now at 50 minutes. So I know on the next slide, we've got a good template. So happy to jump across to that.
Awesome. Great. Have a look at your marketing, and then let's get on with expense review.
And I'll just quickly mention, I know that there are some questions that I haven't answered because there's a lot of questions there. So if that's the case, just drop your email address next to your question, and then I'll follow up afterwards. So I just think we're going to run out of time to get to, I've done my best to answer most of them, but I know that there's some I haven't got to.
Awesome. Oh, that's great. Everyone's got questions. Good engagement levels.
Yeah.
I'll quickly run through this. This is a template we're going to give you as part of this pack. It's an expense review template. You basically need to review line by line each of your expenses and seek out a better price where identified. Call vendors and negotiate, as Meryl mentioned, that rent-free period you might be able to take advantage of. Have a look at other options. Have a look at the competitors for the people that are currently serving you with technology. They might have a better price. Eliminate overlap. If there's multiple resources with the same capabilities, cut one. And then create systems to track and verify expenses, such as this handy little spreadsheet. So we'll give you this. It's a Google Doc. You can save offline and run through it. It basically gets you to list out all of your expenses, the cost it's giving you, and then if it's required. And there's a little selector to work out if you need it, if you can find a better price, or if it's essential, or you can cut altogether. So that's a handy spreadsheet we'll give you as part of this pack. So that's the end of the session, guys. This is, I think, a very valid quote around resilience in tough times. The greatest glory in living lies not in never falling, but in rising every time we fall. And this is obviously a really challenging period health-wise for a lot of people, and also economically. So I'm trying to see the positives or the opportunities in it, which is it will teach us a lot of lessons. There's a lot to be learned in these periods as well. So hopefully we can control the things in our orbit and focus on doing the best at them. Let the external noise kind of pass us over, and hopefully try and make this a learning experience as best we can in a tough time. And I think sticking together and speaking to people and community are really, really important right now. So it's a little quote to finish us. That's what we covered: the federal government, the tax office, some stuff for households, and some cash flow tips. I'm going to give you all these websites. The Treasury is a great website because they break down these stimulus packages in easy to understand language. Some of the announcements are really convoluted with the technical terms. So these are some good websites for you to access for the various stimulus offerings. And your bonus gift, if you've stayed, thank you very much. We appreciate your attention. Thank you for tuning in. If you go to beninjas.com/webinar gift, you'll find there's a little landing page there with some gifts for you. If you're struggling cash flow wise and you want to explore some ideas around profit first, book in a call with me. We'll give you a PDF of the slide deck will be sent. And Meryl, do you want to talk through that financial foundations course? That's a really generous offer.
One is called Financial Foundations, and that's a course that helps you to set up your financial system. So how to use Xero and to get into good routines and use automation. That's a course that we sell. We've actually been running a whole ad campaign around that. And we've realized in the current economic times, everyone needs to understand their finances and really be on top of this. So we're offering it for free at the moment up until the 17th of April, just to help every small business owner to get on top of their finances.
Awesome. And I should note there's a couple of other resources in there. There's a blog post about some of these stimulus packages. And as Meryl said, we're working on a new blog post about some of that short-term financing options available as well. So that will be updated once that's ready to go. Is there any more Q&A that we need to answer at the moment, Meryl, or do you think we'll try and get that to people individually?
Yeah, I think best with that, we'll do a follow-up. If there's some particular topics, then we can record another video on it. And otherwise, I'll just follow up individually with everyone with individual questions. So just make sure to drop your email address in there if you're waiting for an answer from me. And thanks again, everyone. I appreciate you taking the time to be here. And I think that investing in your own financial literacy and spending time thinking about your businesses and how you can access things like government stimulus is really important to do. So I thank you, all of you, for attending.
Thanks for tuning in, guys. We'll chat to you soon.
Thanks.
All right. And now I'll just try and turn off this webinar for us, Meryl. It looks like it's still running.
Just give me a sec, and I'm just going to copy all the questions to make sure I don't miss anyone.
Absolutely. I think we're... Marty's asked where the spreadsheet is. We'll be sharing the spreadsheet. We'll be sharing the slides, Marty, and we'll be sending out a link to that spreadsheet where you can download it. So it's on a G Drive link that we'll share with you. Awesome. All right, I'm just going to see if I can. Can you stop the broadcast on your end, Meryl?
I don't think I can.
Okay, I'm just going to jump out here for a sec. Log in again. Awesome. Well, we went a little over time, but hopefully people got some value, huh?
Yeah. Is the broadcast off at the moment?
No, I'm trying to go in again and turn it off again. Might be a little bit of a technical error. All right. I'll just jump out of here, Meryl. 2 seconds. Again.